Recent court filings have thrown student loans into uncertainty, leaving many borrowers full of anxiety and wondering what's next. In this video, I'm going to explore 4 potential outcomes from the upcoming election and reveal how each one can impact your student loan repayment plan. With that being said, let's jump into it. Let's start with the first potential outcome. President Trump wins, but Congress remains divided. We already expect the Supreme Court to strike down the new SAVE program, and there's a high likelihood they're going to strike down pay-as-you-earn as well. So that would leave only 3 repayment plans left: the standard plan, the extended plan, as well as income-based repayment, IBR. In this scenario, we don't see any new plans being brought forth in the next 4 years. And that's the good news about this scenario, is that we know that we're going to have certainty for the next 4 years. The bad news is that for a lot of people, their payments are going to go up to what they were underneath President Obama and President Trump's first term. Now, the next outcome is where things start getting a little bit tricky. In this scenario, Trump wins and Congress goes to Republicans, both the House and the Senate. This gets tricky because there's been a lot of talk that if this scenario happens, then they're going to eliminate all income-driven repayment plans. However, I don't really know if that's true or not, because underneath President Trump's first term, student loans were kind of like an afterthought, and they didn't want to do anything with them. So while the anxiety I see is real, that this scenario might happen and income-driven repayment plans are eliminated, we actually don't expect any dramatic changes here. So what you need to know in this scenario, from our standpoint, is that you're still going to have 3 repayment plans: standard, extended, and IBR. However, what you need to keep in the back of your mind is that in this scenario, if it happens, there is a small chance that the income-driven repayment plans all go away. Before we continue, this is a big deal, so if you're feeling anxious, you're not alone. Our goal is to update you as soon as we get new information about student loans, as well as everything else that affects young professionals financially. So be sure to subscribe so you can stay informed and prepared. So that way you can reduce your anxiety and stress levels when it comes to the student loan repayment stuff. In this next scenario, things can get really messy. This scenario is Harris winning, but Congress staying divided. And this gets messy because we're probably going to see a lot of back and forth, the same way that we've been seeing that for the last 4 years, meaning this. If the Supreme Court strikes down SAVE and pay-as-you-earn, then the Harris administration and the Department of Education, I expect, would be coming out with their own version of an income-based repayment plan. But just like we've seen the last 4 years, those new plans would probably face court challenges as well, creating even more uncertainty for borrowers. If that sounds frustrating, it's because it is. And the fourth scenario doesn't clean up that frustration either. And in that scenario, it's if Harris wins and Democrats take full control of Congress. Now, in that scenario, I think we would see a lot of movement, meaning the Democrats would try to codify into law new income-based repayment plans, which would mean that they were harder to challenge in court. How generous these new plans would be, it all just depends on how much Democrats want to push. Now, I said that this could still be messy, even though it's codified in the law, because they could still face court challenges. It'd be similar to what we saw with Obamacare. So the result of this fourth scenario, potentially a lot more chaos. So where does this leave you at? Right now, it looks like IBR is going to remain an option. So that's a good fallback plan. But the next video you should watch is to make sure you understand how IBR works.